Good morning, everyone, and happy Wednesday. It is Julie here with your TipRanks pre-market morning update, where we're giving you everything you need to know before the market opens. I am here Monday through Friday with videos out before the opening bell. So if you aren't already, make sure that you're subscribed to the channel and turn those notifications on so that you can stay up to date with all of our latest videos. This morning, we'll be covering exciting stock market news, the biggest gainers and losers, plus notable earnings reports. So here we go, starting off with stock market news. U.S. stock futures are all in the green so far this morning, with the Dow, S&P 500, and NASDAQ futures all up about 0.06%. President Joe Biden will deliver his second speech on his $2 trillion infrastructure plan today as he tries to rally support from the Republican side. The White House has said that they want to make significant progress on the package by Memorial Day. In vaccine news, Biden announced yesterday that every American adult would be eligible for the vaccine as of April 19th. Palantir Technologies has won a contract worth $89.9 million from the National Nuclear Security Administration, or the NNSA, for 5 years. Notably, this marks the company's first contract with the NNSA. Per the contract, Palantir Technologies will act as the platform for the NNSA's SAFER, or Safety Analytics Forecasting and Evaluation Reporting Project. SAFER is the proposed platform that will integrate data and allow the NNSA to measure the health of the organization's safety programs. As a result, the NNSA staff will be able to track, trend, query, and analyze safety metrics from different sites across the country. The Palantir Technology stock does come in as a moderate sell currently, and their average price target of $25 would be about an 11% potential upside. This is largely brought up from a very bullish buy rating from Jefferies, with a $40 price target that would be an over 71% growth potential. Consulting and engineering services provider Tetra has also won a contract. Theirs is a $49 million contract with the U.S. ACE. Under the 5-year contract, Tetra will provide environmental services, which includes protecting and restoring the natural environment and supporting facilities throughout the U.S. The company's CEO said that U.S. ACE has been a valued client for more than 40 years. We look forward to continuing to use our Leading with Science approach to support U.S. ACE's environmental management initiatives. Tetra stock currently comes in as a strong buy with an average upside potential just over 9%, the most recent rating coming 21 days ago with a 30% potential upside. And just one more contract announcement this morning, guys, and that is with AeroVironment. They have received 4 fixed price orders worth $11 million from the NATO Support and Procurement Agency for a tactical unmanned aircraft system. AeroVironment said that the Puma AE unmanned aircraft system enables frontline forces to gather real-time intelligence, surveillance, and reconnaissance in any operational environment. These orders are part of their 3-year based contract received from the NSPA in January of last year. According to AeroVironment, the total potential value of the multi-year contract is $80 million. AeroVironment does currently come in as a moderate buy with a price target of $125 per share for about a 6.5% growth potential. Cash management and armored truck company Brinks has announced the acquisition of Pay Incorporated, an ATM services provider, for $213 million. As a result of the deal, the Brinks Company will gain access to a software-as-a-service-based technology platform used to enhance ATM network performance. Pay is likely to deliver revenue and adjusted EBITDA of about $320 million and $30 million respectively. Meanwhile, it is expected to add approximately $240 million of revenue and $22 million of adjusted EBITDA to BCO's earnings in 2021. The BCO stock does just currently have 2 analyst ratings, but it does come in as a buy with over a 15% potential upside. And Norwegian Cruise Lines has planned a phased return to cruising. The cruise company unveiled a 2-pronged plan, with cruise resumption outside the United States from Jamaica, Dominican Republic, and Greece starting from July this year. Separately, they've also submitted a proposal to the Center for Disease Control and Prevention in the United States on April 5th, with a plan for cruise resumption from U.S. ports starting from July 4th. It also requested the CDC to lift the conditional sail order. The company said that all initial voyages will operate only with fully vaccinated guests and crew and will include virus testing for all before embarking. Norwegian Cruise Line currently comes in as a moderate buy with just a 1.77% potential upside. We definitely have a mix of analyst ratings, with a hold rating having a downside of nearly 20%, while we have a buy rating with an upside of nearly 30%. Now taking a look at this morning's biggest gainers and losers. Starting off with our biggest gainer, who actually just had their IPO yesterday, that is UTime. Under the ticker UTME, they are up 30% in the pre-market after seeing gains of over 240% yesterday. We also have SOS under the same ticker, who's up 37% in the pre-market, and CBAC Energy Technology under CBAT. They're currently up 23%. Looking at our biggest losers this morning so far, starting off with Fibrogen. Under the ticker FGEN, they're currently down 29%. Followed by Homology Medicines under FIXX, currently down 11.6%, and Galactin Therapeutics under GALT. They're currently down 10% in the pre-market, following a gain of 35% yesterday. Now moving over to notable earnings reports. Starting out with Maxeon, whose shares have slipped after the solar panel manufacturer issued a first quarter outlook that was well below analyst expectations. Maxeon expects to report revenue of approximately $160 million in the first quarter. This is against the street's forecast of $232 million. The company noted that the solar industry continues to face upstream supply chain cost challenges. Meanwhile, Maxeon reported better than expected top-line results for the fourth quarter of 2020. Revenues of $245 million topped consensus estimates of $242 million. However, they plunged 33% year over year, mainly due to an 11.5% decline in module shipment. Maxeon Solar Technologies does currently come in as a moderate buy with an upside potential of 80%. However, we haven't seen any price targets reiterated since their earnings. We also heard from Smart Global Holdings, who forecasted better than expected adjusted earnings and net sales in their fiscal third quarter after their second quarter results topped consensus estimates. Smart Global's second quarter adjusted earnings jumped 67% to 87 cents per share on a year-over-year basis and beat the street's estimates of 80 cents per share. Their net sales rose 11.8% to $304 million and outpaced analyst expectations of $295 million. The company's adjusted gross profit surged 12% year-over-year, while adjusted EBITDA was up 38.9%. Smart Global Holdings comes in as a strong buy, with 5 analysts reiterating their price targets today and yesterday, coming in with an average upside potential of over 30%. We're expecting to hear from Simply Good Foods this morning, as well as Expo and E+ in the after hours today. Next week, we start to see the earnings calendar pick up a lot more, with most of the big banks starting to report their earnings reports. So that is Wednesday's pre-market morning update. If you enjoyed today's video, make sure you hit that thumbs up button and say good morning in the comments down below. Don't forget to check out the TipRanks Twitter page to stay up to date with all of the latest market news. Thank you guys so much for watching, and we will see you back here next time.